Yo, what's up? It's J2O, man. You already know. We out here for another episode of my podcast. It's episode 17, and let's get to it. So the topic for today is what traders should know about news events. There's a lot of news events these days that affect the markets. So news events could cause a lot of momentum in the market. It could cause the trend to change out of nowhere because these events in the market is crucial. It could it could cause the pair to have a lot of volatility, and it could cause the pair to move fast. If it's moving slow, a lot of people like to catch these movements in the market because if you're a day trader, you're trying to make your money and be out your way, in and out your way. So if you out here trading and paying attention to news events, you could capitalize on these moments in the market where it's very volatile and take advantage. And there's so many different type of news events. And one of the important news events that people like to look for is called like for interest rates. The different type of interest rates news, but it's very important to understand interest rates because it affects not just the forex market, but also the stock market. And for like day traders, they love interest rates, like especially if you trade currencies, because like the higher the rate of return, the more interest is accrued on a currency invested, and the higher the profit. So if you're a day trader, your goal is to make big profits. You know what I mean? So if you are focusing on interest rates, like hopefully it's like high interest rates, the news hits, and you can capitalize on your trades. And also, when the Fed changes interest rates, it affects the market in both direct and indirect ways as like borrowing becomes more and less costly for individuals and businesses. So if borrowing becomes more like available to others, it's gonna cause a lot of people to be spending more in economy because they're able to borrow more money and consume more money. So the consumer is gonna be out there spending more. So that's like a good thing. So that's a good thing that happens due to when the Fed like make changes to interest rates. And also for the stock market, like the stock market reaction to interest rates change is generally immediate. However, the real economy takes about a year or so to see the widespread effects. Because sometimes, like when something happens, like a news event, you won't see the effects. You won't really be able to analyze the effects until you see it for like a couple of months to see the true effect of what's happening. For example, the coronavirus right now is clearly affecting the economy. A lot of unemployment, um, a lot of people losing jobs. So for that event, you can kind of see the immediate effect. But then if you wait even to like 6 months, a year, you can see the true effect of this virus, for example, that's affecting the market currently. So that's the same thing with like interest rates. They could put like a high interest rate, and then over time they can analyze to see the effect of what's happening. Just like, for example, like for people who are buying homes, when they decreasing the interest rates right now for like getting homes and stuff, so people are trying to buy homes now because the rates are low. So if you look at the impact for like a year at that, it probably would be like more people buying homes because the rates are lower if you wait like a year to see the full effect of what happened by them lowering the rates for buying homes. And also, like higher rates tend to negatively affect earnings and stock prices, with exception in the financial sector. So I know if you have like stocks, you're like, oh man, like it's like more fees, these rates. So it's probably not like a great thing when there's like high rates. It could affect like the stock prices. But if you trade currencies, like it doesn't really matter because currencies you want the rates to be higher for the currency pairs, so it's a good thing. But maybe stocks is having like stock prices, stock share is not the best. So just understanding that you could make good decisions. And me, I personally like when interest rates are going up high, especially because I trade mostly forex, and I'm a day trader, and I'm trying to like capitalize on these big movements, big swings. So I look for moments like this happens on a monthly basis in the market. So that's a little bit about how interest rates affect the market, these news events. There's other news events like unemployment that affects the market. Um, Hearing the reports about each country when they send reports about how they're performing, like it affects the market for that currency pair dramatically. And right now, obviously, coronavirus, everyone knows about that. It's definitely affecting the market, the U.S. market. So hopefully things get better. But if it doesn't, you can still make money when the market goes up and down. And that's the great thing about trading. All you got to do is know how to execute and take a position. So that's all I have for today for this episode. Make sure you subscribe, like, comment, and let me know what you think. You already know we out here. Peace.